The content discussed in this podcast is for informational and educational purposes only and should not be construed as financial or mortgage advice. Always consult with a licensed professional before making any decisions regarding mortgages or financial matters.
Welcome to the Canadian Mortgage Show. Here are mortgage professionals Alex Pang and Alex Shanks to cut through the BS and educate Canadians on all things mortgages and real estate.
Welcome to another episode of the Canadian Mortgage Show. I'm your host, Alex Pang, along with my co-host, Alex Shanks. We had a good week last week, right?
It was a good one, buddy. Getting to see you in person, that's always the best. It was only our second time meeting each other.
Yeah, it was quite the long day. Not for me, but for you, since you traveled all the way from Courtney. Why don't you tell us about what your whole day entailed?
I was up at about 5 a.m. in the morning, and we recorded our podcast before that. I think I got to bed at 11, up at 5, drove down to Nanaimo, got on the new Hulu ferry. That was pretty nice, right to downtown. Hung out for a little bit, and then I got to come meet you. We went to our industry event there, which is amazing, getting together with a bunch of other mortgage brokers, just chatting about things. And we had people that were listening to us. So I'm going to say, hey, that was awesome.
Yeah, so that was a huge win. I'm like, oh, people actually listen to us. So it was great. Another mortgage broker mentioned us. So if you're listening out there, I got to give you a shout out. Thank you for listening.
Thank you. Exactly. I'll leave Alex alone a little bit, saying that you're not the only one ramping up our video views.
Yeah. So what else? We went to the Canucks game. It was, I wouldn't say less than exciting, but yeah, it was a tight game. Went to overtime, went to a shootout. And you know what? We really couldn't stay to the end because you needed to catch a ferry. And we were literally standing right at the door of the stadium where the TV is going. I'm like, oh, we need to book it because you need to make your ferry. Yeah. And I think the TV was delayed compared to the live action. So we could hear, and then we're like, oh,
if it was going to score, not going to score.
Exactly. But you know what? All in all, we had a good time, right?
Yeah, no, it was awesome. And then, I caught the ferry back. And then, I think I was in my bed at around 2:15. But of course, one of my kids woke up. And so I ended up sleeping in his bed. And it was back to waking up at 6:30 in the morning after.
Wow. So that literally was a 21-hour day for you.
It was a long one, but it was definitely well worth it. It was awesome time. Getting to hang out, go watch the hockey game and everything.
No, that was great. And I was surprised you didn't really get heckled at all by wearing a Leafs jersey. Maybe the arena staff guy mentioned it once, but that was about it.
Too early in the season. I don't think people care as much. I've done it before later in the season, and people usually they say something. Yeah. And I wish I could have been on the big screen. It would have been fun, but never happened.
It didn't work out. But we were there and it was a good time. All right. So we've got a pretty good show. Why don't you start us off first?
Let's go into it. We got a few different things to talk about. We got some big news, but the first thing is Canada's unemployment rate has fallen to 6.5% in September. We did net some jobs of 47,000. Honestly, I feel like that might happen because it says it was 112 full-time and 61,000 part-time. I feel like that number's probably incorrect, to be honest. The one thing we did get, and we'll talk about it with some other numbers, is last week US, their unemployment, they got a big job report that they brought a bunch of people to employment, which actually pushed a lot of pressure on our bonds. And it's starting to figure out what's going to happen with fixed rate mortgages. And I know that we're going to kind of go over that a little bit later here. It was nice to see that wages are up 4.6%. Which is actually higher than the next thing we're going to talk about.
Yeah, so after this first set of news came out, BMO mentioned because of this, the likelihood of a 50 basis point rate cut next week is probably less now. Now it's 25. Guess what? There's news to counter that now. And so the inflation report came out for September and it slowed to 1.6%. And that's been the lowest it's been in 3 years since the pandemic. And now if you exclude shelter cost, and you know how my feelings about it, it's a number that just that doesn't help it. It's kind of the dog chasing the tail kind of number. If you exclude shelter costs, inflation is only 0.4%. So that conflicting information, there's 5 of the 6 banks have been polled and they are calling for a 50 basis point or 0.5% rate cut next week. Now, TD is the only one of the big 6 that are wavering, either 25 or 50. Now, I would love to see a 50.
What's your bet? Let's do it right here. Let's say so I'm still going to say it's a 0.25. I believe it could maybe be a 0.5%. I feel like they could do 0.25 and do a few more. And so what are your thoughts? We'll buy each other Starbucks.
Yeah, let's do these Twinkie bets. You know what? I'm going to be bold. I'm going to call for a 50 basis point cut.
All right.
Yeah, it's starting to see now where obviously the banks have a vested interest on calling these things because the revenues are down, growth is down and such. So they're looking to generate more business. So what they're calling for is probably a desire as well. And especially all of us who have mortgages, who are in the industry, we want to see a larger cut because the high rates have been killing everyone's finances over the last couple of years. But I'm gonna call it 50.
And I mean, it's gonna be one of them for sure. It's gonna be 0.25 or 0.5%. That's pretty much guaranteed. It's not gonna be a zero. Mm-hmm. And the reason why that there's more pressure on this for other people to understand is when we talk at that inflation's only at 0.4, that means we're starting to get towards deflation, which the government, we do not want at all. That is the worst thing that we can get to. And that is why there's a highly likely of a 0.5% to start putting stuff back out into the market. Mm-hmm. It helps mortgages. We all understand that. But this is also to fund for businesses. This is trying to say, hey, we need people to spend a little bit more money now. Before it was about, hey, stop spending. We now need people to start spending.
Yeah, if you look at a pendulum, it's just swinging one way, now swinging back, and it'll eventually settle. And so far with these...
And that's my thoughts of why I don't know if it will be a 0.5%, just because they did such aggressive increases that I feel like they're probably like, we need to do this more incrementally, because if they overshoot it up at the same time, but October 23rd is going to tell us.
Yeah, let's just say we will brace for 25, but hope for 50.
Yeah. My fingers are crossed. I'm not going to be too upset if I lose this bet.
Yeah, exactly. Speaking of TD, that was some big news.
It's just a small chump change. Don't you have $3 billion sitting around?
Yeah, so TD in the States was slapped with a $3 billion US fine, the largest in their country's Bank Secrecy Act, for essentially helping drug cartels launder money. And I was reading the articles about it. Basically, a whole bunch of tellers and employees were bribed and to look the other way, where fentanyl traffickers, drug traffickers, bags of cash deposit daily, and several employees were involved, and they would just walk in with bags. I saw the videos of it, and I'm like, this is insane. And the big thing, and it's pretty scary, the US can be loosey-goosey on stuff. Like, they're kind of the Wild West, and for them to slap such a big fine, and it's not only the fine that is going to push down TD stock, they're going to have to reduce their growth. They were trying to grow in the US, and that's going to be like, it's pretty much bar none until they show that they've changed their ways. Yeah.
Which, I mean, for these banks, like, it is a slap on the wrist to them. Like, TD, they knew this was going to happen. They actually put $3 billion aside getting ready for this. It wasn't like something that they're like, they knew that they made a mess. They make more money than $3 billion in a year. So, like, to them, it's a business write-off.
Yeah, so their US revenue, it represents only 25% of their global earnings. So $3 billion, that's a whole lot of money. But in the grand scheme of things, I guess they can afford it. Is that the cost of doing business?
Yeah. So, I mean, look at HSBC. That was the last one in Canada in 2016. I think it was 1.2 billion. I think that I could be wrong on that, but that was another big one. And same thing. It was from fraud and everything and drug trafficking. And I'm not going to say like the banks know what's happening. They want to say they don't want this to happen, but they profit off of
exactly. And by letting it happen, they become complicit in criminal activity as well.
Yeah.
I mean, they pled guilty, but no one faces prison time. They just have to pay a bunch. Yeah. I mean,
what is that joke going around? I saw something about it's cheaper for someone to rob a bank than it is to pay. There was some meme somewhere. It was like I couldn't remember, but it was cheaper for someone to go try and rob a bank than it was to like pay their mortgage. And it's just this just makes me think of they did something really bad. There was people that allowed it. Like why are no heads falling?
Exactly. Now the CEO Bharat Masrani, he apologized. He says he takes full responsibility, but he doesn't resign. And but the article goes on to say that he is retiring next year, and there's a new CEO that will take over. So what? I'm sorry, and I will retire next year, but I don't understand this.
I'll take my multi-million-dollar pension, and it's all good.
Yeah, it's. I'd like to think that this is going to go away eventually. It'll happen again with another institution because
and I mean we know that we on for personally for mortgage brokers on October 11th we have to do more anti-money laundering stuff than we've ever had to do before, which means our clients have to do more things. Now the reason why these come in is because there's a few bad people that do these things, and then everyone else gets looked at in the same light. I have to show someone that, hey, did this deposit really come from your parents? That is all because there's people that are doing drug money, doing illegal things, and now every person gets looked at that light, which is, to me, is just so unfair that I have to treat every single person as someone that's illegal, even though maybe it's an old lady.
Yeah, exactly. It's just a few bad apples ruin it for the rest of us, but it's the world we live in now.
Yeah, and so don't be prepared, or be prepared if you're looking at getting a mortgage with TD. I bet you they're going to ask for more documents than they also used to ask for. And TD's already one of the ones that they ask for a lot. They're the one that usually asks for the most documents.
It's not just TD too, because there's such a spotlight on this in our industry. Every single institution will have to. You're going to be required to provide more documents, and I know a lot of you who took out mortgages maybe 10, 15, 20 years ago, saying, I never had to do that. When I took a mortgage out, it was easy. Hey, times have changed. It's a lot harder now.
Yeah. And just for people to know that me and Alex, we're not sitting there laughing, oh, this is so fun asking for all these extra documents. We try and limit the amount that you need to get. There's a minimum. Sometimes the lenders ask for more. We're not sitting there saying, I'm going to ask this guy for that 90-day statement today just to make his day.
Yeah, don't shoot the messenger. We're not trying to make your life difficult. Help us help you. Yeah. So what's more? There's now, more going on, right?
There's more, and I mean this is in the U.S. We're also going to get into some stuff into Canada here, but a big one that could potentially affect real estate in Canada is China moves to boost a tax revenue on a crackdown for their foreign wealth. And their big thing is they want to crack down on overseas investments for the ultra wealthy for other investment vehicles, which is real estate in Canada.
Yeah. It looks like this is in light of their drying up real estate market, where real estate transactions have fallen off a cliff, as they really are kind of crashing in a sense.
Yeah. And I mean, they're like facing tax bills of up to 20% on their investment gains. And I mean, there's a lot of people that if they bought in, say, 2020 in Vancouver, I mean, they're going to be paying a bunch of money that way.
How will the Chinese government know that these individuals have offshore assets? Isn't it just basically self-declaring, or like how can they?
That's the article I read. Like it's the tax. Let's say their CRA is calling people and coming in and saying, "Hey, explain to us where your assets are." And now, I mean, it's already hard to get money out of China. Like it is hard for families to do that, but that's why they have kids and stuff that are here. They're able to buy it. I mean, it's not going to be an easy thing for them to figure out where's these 5 properties you own. I don't think it's going to be an easy task for them to figure out. But certain people, the ones that aren't probably all that savvy, they may get caught with it.
Yeah. Now, here's the thing. Like, how will the government know people have 5 offshore properties if they don't disclose it? That's the thing. The article says, some have been asked to do a self-assessment. The easy way is somebody says, I don't own anything offshore.
And
hard to say like how it's going to play out.
Honestly, I feel like it's a bit of a scare tactic of trying to say, hey, let's keep our money in China, stop moving it elsewhere right now. And it's just trying a bit of a scare tactic is what I think.
Yeah. I mean,
it comes because of, I don't know if anyone else remember what's going on before, but like one of the biggest developer real estate crashes in the world is Evergrande. And they're still dealing with that. Like they owe people over $300 billion. Like we just talked about $3 billion at TD. This company was not able to restructure its debt to pay out $300 billion.
So what really happened there? Did they just build and build and build with the whole premise that real estate will keep going up and up? Is that the whole the house of cards behind it?
More or less, like they had a bunch of investments, and it's not just in China, it was all across. Like it's in Canada. They're like they have developments everywhere, buying commercial spaces. I mean, like we've got stories of people that bought in San Francisco in 2020, 2021, a commercial building for $200 million. That same building is now selling for $30 million. And that's where they just kind of said, hey, real estate's only going up. It was so crazy in 2020, 2021. It was very lucrative to do developments, to build towers, people to buy them. And we know that's just not the case now.
I guess that's the whole greed of cheap interest rates, not just in Canada, but across the world, right? When low interest rates, money was flowing, especially even during COVID. A lot of governments from all countries pumped money into their economies and people couldn't travel. So guess what they do? They bought on Amazon, home fitness, and hey, let's buy real estate because we were all encouraged to borrow.
Yeah. And that's, I mean, I know smaller developers that they decide to try and go big because they're like, hey, we've made a bunch of profits, and they've now crashed and burned.
Yeah.
There's a bunch of like real estate investment, like those, I'm not going to say names, but there's companies out there that like get people in. They say, hey, I'm going to teach you how to buy real estate. And I mean, they charge people like $10,000 to give you like a course. And you can find a mortgage professional, an accountant, a realtor that like would give you this information all for free.
Yeah, absolutely. Yeah. When greed is abound, you hear all these seminar gurus of invest and with zero down and all that stuff, because greed begets greed and all that. So we don't hear much of that anymore.
I feel like there's a lot more coaching going on right now. Everyone's coaches, because I don't know if their business is just not doing as good. And they're like, hey, look at how I made $100 million in real estate as a realtor. And now they have a coaching program.
Yeah. Or these TikTok stars, like learn how I generate hundreds of thousands with these deals using TikTok. And hey, it might have worked for some people, and that's great for you, but it may not work for everybody.
And I mean, TikTok was great back in 2021, 2022. It was awesome.
That was the rise of COVID, right? Rise of TikTok during COVID, because we had nothing else to do.
But it's now it is to me, TikTok is such a, it sucks. I mean, that's how me and you were able to connect. That's how I met so many people. I don't know. I don't really enjoy TikTok anymore. I find even the way the platform goes, where to me, it's doing stuff like this where we can really provide value is more what makes me happy now. It's to make a video. It's hard for me to do it now. Where before it was like something I enjoyed doing.
No, I agree. The longer form, it seems like it's shifting now for more YouTube, Spotify, all that stuff, because it's more of a genuine conversation and deeper connection. I mean, we're doing this online, but we're talking to people about what's going on in the market, things that are happening. But let's bring this back home to Canada. I mean, there's always things going on with the Liberal government and such, and we hear about all the political unrest amongst the people with the current government, but there's unrest within the government. What we're hearing is that 30 Liberal MPs were planning to write a letter asking Trudeau to resign. Do you think that'll actually work?
Yeah, I listen. No, but I listened to one of them actually talk about, and I mean, the whole point of the MPs, they're there to be for us. That's what they're meant to be. They're meant to be bringing back to Ottawa what do we the people want. And it was just like the one Liberal person just said, hey, all I hear from people every day is I don't like the government that's in. And it's not only the government in, it's the person in. But we've seen, I mean, there needs to be a no confidence vote to trigger an election. I feel like it's been tried twice this year already. And I mean, it's for one, NDP backed him up the first time. Then the Bloc came in and said, "Hey, you give me this, and I'm here to help you out." And we should actually follow back up on that Bloc thing to see if they got their little blackmail deal they
Yeah, I
wanted.
haven't heard anything else because there's so much stuff going on that people have forgotten about this. But yeah, to be honest,
Yeah.
I don't think anything will happen. You ask him to resign, but he's just gonna say no, or I'm just like, or he'll feel like, oh, I can still win this election. We have news for you. It's probably gonna change when that time comes. But yeah, I mean,
yeah, I mean, it'll be interesting. I mean, we didn't want to get into too much, but I mean, there's obviously the news going on between the conservatives and stuff right now, and it's just, I mean, it's so hard. I find the hardest thing as a Canadian is to filter through almost just the garbage. It's so hard to get like real information. I remember when I was 18, the first time I ever voted, I was able to go to the news, really find like unbiased opinions, where now it's like left. I can't find that in between of tell me what's the pros, what's the negatives, what is each person here going to be helping us with?
Yeah, I mean, bringing it home to our province, we're having an election, and so the final day of actual election is on Saturday. So by the time you guys hear this live on the pod, we'll have the results. But for myself, I voted early. Alex, have you voted early at all, or are you going to do it the day of?
No, I'm going to be doing the day of. I had to we moved, and so I haven't actually got my voter's card. My tenant told me, hey, it's in the mail and stuff, so I got to go.
So you know what? You actually don't need your voter's card. You can go to wherever you're voting. You have to go to elections.bc.ca or something like that.
Yeah.
So it's a weird thing where they mailed it out late, and some people in my household got it, but I didn't. So we ended up going, as long as you bring your 2 pieces of ID and such, we were able to vote early.
Okay.
But yeah, this is a public service announcement. As a Canadian, exercise your privilege and right to vote. I know in previous elections, we had a really low turnover, not this past one, but I think the one before we only had 40%, and this most recent one was 60. But a lot of people think, oh,
I think I saw,
a lot of people think that
I think I saw a post on it.
A lot of people think that my vote doesn't matter. What's one vote? But it does matter. This is why we live in Canada. And I don't want to do the whole talking to my kid thing. This is why we live in a first world country, to have these rights and privileges that people in Africa or in dictatorships don't have, and exercise that right to vote. Be educated. Don't just follow whatever ad that you see on Twitter or the news or social. Educate yourself and look into what each party's platform, what they stand for. Now, at the same time, because we've been around, understand that maybe governments don't end up fulfilling the platforms or the promises they set out to be, but it's almost pick your poison. But choose a party that more aligns to what your beliefs are and how you want them to run our government, our city, our province, and our country.
Yeah, and that's your oldest, Alex. He's 16, right? That's your
17.
How old's your oldest
17.
there?
Yeah, so he's going to be able to vote
17.
next year.
So next year. Yeah. And that's, I mean, the way that my parents sat down with me and they said, hey, you need to go do the research. Cause I just said, hey, who do you vote for? I was just like, tell me who you vote for. I'll just vote for the same person. But they were like, no, you need to sit down. And I would say in our household, we may have all voted for different people. It was never like I think we maybe talked about it after of like, hey, this is who I voted for, to kind of figure out why you voted for that person. But yeah, it was never like, hey, you need to vote for who I think is right. It was really like, you need to do your research, figure out who you think is best for you.
Yeah, that's same thing for us too. When we went to do our early vote yesterday, we actually read found a few websites that did the whole party platform and based on certain issues when it comes to housing, medical, health, all those kind of things. And yeah, we made our decision based on that, and it was pretty quick. But yeah, go out and vote.
We'll see next week.
So I think it's time for viewer mailbag.
Yeah, let's do it. Let's see what do we got in here first. I see some questions. Do you tell me if you want me to go first or
Yeah,
if you want to
yeah.
go
How about
first?
I read the first one here? I hear that I
Sounds
hear that
good.
the amortization is changing to 30 years. If I already have a mortgage, will I be able to also use this?
That feels a bit of a loaded question. So I'm gonna break it down into a few different things because we have a new thing that came out earlier this year that if you were buying a new construction, you were going to be able to get a 30-year amortization. Government has now changed that on December 15th. Anyone that's buying a home, if you are a first-time home buyer, you can now go to a 30-year amortization. 30-year amortizations, they've always been here, but it's only for people that had 20% equity in their property. So I don't fully know. We'd have to go back and message these people and ask them, like, are they in an insured mortgage? Did they put less than 20% down? And now are they wondering, can they go up to 30 years? And in that case, you wouldn't be able to. If you've already bought your home, say even last month, you're not going to be able to go up to a 30-year amortization. Once you have equity in your house, more than 20%, you can then do what's called a refinance to actually change your amortization, depending on what that way. And so we'll make sure we reach out to these people and ask them kind of exactly what they're looking for to help them out that
Yeah, and
way.
just to add to what you mentioned, especially in the last couple of years, where people's payments have gone up, especially for variable, and
Yeah.
looking for some relief. So come renewal time, let's say you're down to 20 or 25 years or whatever it be, and because interest rates have gone up since you took out your mortgage, they've come down. But by the time you renew, it's not going to be 1.5%, 2% anymore. Could be four something. God willing, it could be three, but it'll be more. And to help with the payment shock, you could always ask your bank to stretch that amortization back out to 30 years. Refinance, like Alex said, look for another lender. If not, worst case, ask your existing lender to stretch it back out to 25 or 30 years to help with the monthly payment. Of course, yes, you will be paying more interest over time, but I think a lot of times people are looking more for monthly cash flow just to be able to get by
Yeah.
and
Now, the one thing to clarify for Alex on that is that's again depending on what type of mortgage you have. Because if you have an insured mortgage, that is you're then doing a refinance, which you have to do specifically. There's certain lenders that you can do what's called a collateral switch to allow to change your amortization on an insured mortgage. But again, it depends on what lender you're with and if it's even possible, or if not, like you're at, if you got a mortgage 25, you're now at 20 years and you can't increase
yeah.
that. And that's the insurers. They do have, it was back in like 2022 when rates really went up. There is, if you're going through financial distress and stuff, there is a way to contact your mortgage insurer, the person that actually like has the insurance on the property, not your lender. And they can push that back up. And they were even allowing people to go up to 40 years. They were actually allowing some people to go up to 40 years, but it has to be a very good reason and under financial
Yeah, and it
distress.
is case by case, so it's not expected to happen. And if you
Yeah,
are like looking into it, you most likely would have to show like where your money is going and your financial,
would
like
have.
they'll probably have
Yeah,
to comb through, okay, where does your money go? What are your expenses?
yeah.
And just to be able to do that. But that it is available if it's there.
Here, I got one for you. Now, should I cancel my credit cards when they're actually looking at getting a mortgage?
So I understand what this this person's asking, that having a credit card may be bad because it's debt, but you build your credit rating by having a credit card and using it. So I would say no, but you make sure you make your payments and not have a high balance relative to your limit, because the higher, if you do carry a balance on your credit card, the higher the balance it is relative to the limit, it does knock down your credit score. No, don't cancel your credit cards, but do make sure that you do pay it regularly. Ideally, you pay it off every month so that you're not carrying debt and paying interest. But no, credit cards are meant to actually help you build your credit.
Yeah, I've always seen people where like they have two or three and they actually cancel one of them just because they don't use it. But especially if you're trying to get a mortgage, that canceling your debt actually drops your credit
Mm.
score. And so again, you want to sit with a professional that can help you that way. The one thing I find where confusion comes for this is in Australia, the way that they get mortgages, they actually have to factor in people's credit cards. Wow, like I have one credit card that gives me a $50,000 limit. In Australia, max credit cards that people have are like $5,000 or $8,000, because with credit cards, it actually goes against their qualifying on a
Wow.
mortgage. Because I mean, it makes sense, because I mean, you could get the house and then go rack up a $50,000 debt right
Hmm.
away. And so they factor that in. They also factor in child payments. If you have not child support, I mean, having to take your kid to daycare, that gets factored into a mortgage
Wow, wow.
application.
Okay, so it sounds like it's even tougher.
Oh yeah, no, I think it's even tougher there. Now they can still go to 95% and buy investment properties at 90. There's pros and cons, but yeah, I did speak with a friend once that she did have to cancel her credit cards to get her mortgage, and then got credit cards
I
again
see, I
after.
see. Okay, so the if the question is for a Canadian, then no, you don't, as long as you
Yeah.
manage your credit properly.
No.
Okay, here's another one. If I'm on maternity leave, how does that work when looking at getting a home?
This is an interesting one, because I'm gonna talk about it, and then I'm also gonna ask you a question after, Alex, to see what your thoughts are on it. With maternity leave, as long as you had full-time employment before, let's say if you were a teacher, a nurse, and you have a return to work date that you know that you're gonna get to return, we get to use your base salary. If your salary is, say, 70,000, we get to use that income to help you qualify, even if you're not working. Now, that's where I get up in the air of, we know that on maternity leave, you're maybe making 2,500 bucks from the government. Sometimes employers will top that up, and that makes sense. But what is your thoughts on that, of someone that's going to go get a house, and they know for the next 9 months, they're probably not going to be making 70,000.
Yeah, I mean, financially, it probably puts them really debt ratio wise a lot higher than the 44%. Geez, could be in the 60,
Yeah.
70%. Just because you can qualify for it doesn't mean you should. Take a look at your personal finances, and
Yeah.
is it going to get you like ahead? And obviously, it's probably a life circumstance where we're moving out of our one bedroom is not serving us anymore because we have a kid. Our two bedrooms not
Yeah.
serving us anymore now because we have two kids now. Those kind of things. So take a look at your finances. Make sure that you can it's going to work for you, and you won't get into a cycle of debt that you won't get out of.
Yeah, that's what I like to tell people is, okay, I can build you your budget for your house. I can show you that, but you need to figure out what is your lifestyle budget, because we don't take into account what people are paying for food. Are they eating out? We don't know what you're actually spending on a monthly basis. We get to see your numbers, but I'm not sitting there adding it all up on you. And that's where I always sit with people and say, hey, like, we can do this, but you have to remember, you have to make this
Yeah,
payment.
and oftentimes too in our business, people often ask, how much can I borrow more than my limit? Because I'm at the edge of the cliff.
Yeah.
Can I extend this cliff a little bit
Yeah.
longer? And we're always constantly asked about that. And there's a reason why those debt servicing numbers are there, is so that you don't get into perpetual debt that you can't afford, and you will be debt ridden all your life, and you won't have a life, and we're not setting you up for success.
Exactly. Yeah, I love being able to like know that people are still going to get to go on vacation, get to like actually enjoy part of their life. Owning a home, it's nice, but you want to do other parts with your life.
Exactly. And other things too. You mentioned that they can only use your base salary. Now, that same example, if it's a teacher or a nurse and they work tons of overtime and their 2 year average was higher, we can't use that 2 year average because now you're on maternity
Yeah,
leave. We can
yeah,
only use your base salary.
yeah,
And we get other questions too.
yeah.
Hey, can we use my salary? Oh, by the way, I don't plan on returning to that job. Don't tell us that.
Yeah, that's and I get the question, and this is one where, to me, it's the way that we do lending sometimes are weird. Is, let's say I have someone that it works a lot of overtime, and what Alex was saying, like, we have to have a 2 year average to even be able to use overtime. Like, the work I used to do is, like, I used to work in camp. I'd be working 12 or 14-hour days, very consistent work. I wouldn't be able to use that income unless I had a 2 year average where that's actually real income. If I could show to a bank like, hey, this person's been making this for 6 months straight, you would think we could use that income. We can't without a 2-year average. If you're talking about like an alternative lender, you can start to get in that area. But again, then a person that goes on maternity leave that actually is not going to be making that income, don't worry, we can use it.
Yeah. Yeah. I mean, the same can be said when it comes to commissions and bonuses. We need to do a 2-year average.
Yeah. Yeah. Commissions, if you're self-employed and your commission income going on maternity leave, there is no income we can use for you. That is the pros and negative of being your own business owner. It comes with some really good pros in that sense, but if you want to go on maternity leave, we can't use that income now.
We can only use the 2-year average on the self-employed. Okay, I think that kind of wraps it up for this episode. On behalf of my co-host Alex Shanks, I'm Alex Pang. Thanks for tuning in. We'll see you next time.
Talk to you later. Now, if you enjoyed this episode, make sure to like and subscribe. If you're listening on Spotify or Apple, make sure to follow us. Please give us a 5-star rating. You can even send us an email because we want to know what you guys want to hear about. That's what we're here for. Reach out anytime.